Hello and welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for December 5th, 2009. Our website is blog.accendotraders.com, where we put together effective video, technical analysis trading plans on a daily basis. We believe that trading plans help us stay focused and keeps us abreast of what's coming down the market that could affect our open positions. And it also allows us to see what sectors are moving one way or the other so that when we are scanning for new trades, we can position ourselves properly. And by being focused and disciplined, it cuts down on our research time, and we have time to spend with our family. So when we look at the week that was, we look at these numbers and we say, oh, look, hey, look, we're up for the week. Yeah, baby, yeah. Certainly looks pretty good, but that really doesn't tell the whole story. We had broad-based buying going on this week. The S&P hit fresh 2009 highs, which is certainly good, and you can see for 2009, we're up 22% for this year. So those people who were dying from the October highs of 2007 are maybe starting to feel some relief. We'll see, unless they sold at the bottom. We had 9 out of 10 sectors in positive. The Dubai crisis of that happened on Thanksgiving and had that volatile action on Friday's half-day session really was resolved by the time Monday came around, so it didn't really move the market. And we had little compelling news this week as far as coming out of the corporate sector. We did have some interesting news out of Bank of America that says they're repaying the TARP. That certainly was positive, but again, didn't really move the market. And then yesterday we had the unemployment rate come out, and it dropped from 10.2% down to 10%. And what's interesting, and also the non-farm payroll jobs cut was 11,000, which was the lowest this year. And which is also interesting because ADP didn't move the market at all on Wednesday. And so yesterday we had a real nice volatile day for our futures traders. Our day traders certainly was a good day for us. But it, again, looking up here and looking at what we were up yesterday really doesn't tell the story. So we'll have to look at that when we look at our overview of yesterday and we look at our daily charts. So when we look at next week, do you see anything that's going to move the market? I don't. Really don't. And we already talked about how there was little compelling news. And again, when we look at the daily charts, we'll see what this week brought up for us with little compelling news. And you can see next week really doesn't either. Not only do we not have any compelling corporate news, we don't have any earnings either. No economic data news either. So it's really going to be interesting as we see the true sentiment of the traders and maybe a continuation of a lack of volume. So let's begin with our overview from FinViz, and you can see a couple things if we look at our Dow, NASDAQ, and the S&P 500. And that is, at open, we certainly took off, didn't we? On all three, we took off. And then the market kind of, consolidated here for about a half hour, and then we had the sell-off, and we filled the gap, which is certainly interesting because certainly gap fill is a productive trade. However, when you have this huge of a gap, rarely does that type of gap fill. So this crash at 11, this volatility, this sell-off, panic at 11 was great for future traders. And then what do you see? We saw the traditional lunchtime lull and the consolidation after that. But again, when you see that the Dow was up 77 and the NASDAQ up 55 and the S&P up 15, 17, well, we were at 150 yesterday and only ended up today 22. So that's certainly interesting, and so we really got to look at the whole story. Up, advancing more stocks making new high 90%, above 50 moving average. When we look at our Rubik's Cube over here, we can see our banking, financial sector taking off. Just wanted to show you Bank of America. Remember how they said they're paying off the TARP? Going back quickly, we can see some reds that are interesting. Apple, red, IBM, basically on par for the day. XOM, ExxonMobil down, Google not leading us. So we were missing some of our major NASDAQ leaders to take us higher. And as we continue to try to tell the whole story, we see that yes, volume did go up today, and we had a rather nice bullish breadth. More stocks were buying going on. There was more buying going on than there was selling. more buying going on than it was selling, but it doesn't really tell us the whole story. Again, a nice number, 2,000, as far as the advancing. 400 stocks making new highs is certainly great. Again, we're making new highs. But the question is, what was going on during that panic sell-off? Was there volume there, or did it go off? So we'll take a look at that as we move further. So here we do get sort of the full picture and how the market took off, exceeded wicks. And what have we been saying all week? Put an alert above the highs of these wicks to see if the market can move higher. And you can see we did not get above that 10,500 range. That's basically what we said. Put an alert there and see if we get confirmation, especially a close above that 10,500. And we have yet to get that on the Dow. There's our increase in volume, although that might be just a little bit off. Let's switch over to the shorter time frame. And yeah, you can see that we've entered this sort of consolidation pattern, a nice tight pattern here for the past 2-3 weeks. And until we break above it, below the 20 moving average, really below 10,250 or above 10,500, that's showing that the conviction of the traders just isn't there yet. Our so-called Santa Claus rally just hasn't happened yet. Here we are on the NASDAQ, and we did say to put your alert about 2200, but you can see we're still in that range. We broke out and came right back into the range. Broke out, came right back into it. A little bit better on the volume. S&P 500. We did get above the wicks that we were trying to get above, but again, we came right back down into the range. So we need to continue to replace our alerts there above the wicks and see what we can get around, what is that, 1150-ish, 1125-ish, and below, what's that, 1075 on the S&P 500. And we need to see what's going to move the market above or below those highs and lows of our pivots here, because again, what did we say already? There's no economic data next week. There's no earnings next week. What's gonna convey the traders to buy? The Santa Claus rally? I don't know. Maybe some people are trying to save their profits as we come to the end of the year. Here on S&P, still we said the likely target was to get to the 50. There's still hope, but we're pausing a little bit here. Switching over to the NASDAQ above the 50, and now we are getting into that range. We're basically sitting right at it, where we said we needed to get above basically 2175. If we can get above that, we get above this consolidation in previous years and possibly head up to at least the 2400 level, maybe even 2500 level. And finally, on the Dow, we're at the 50 moving average, which lines up with the support and resistance established back in 05 and 06. And if we can break there, 10,900 doesn't look that bad if we can break the 50 moving average. I do want to take the time to point out a couple sectors. First of all, metals. As the dollar is getting weak, these metals sectors are looking great. Look at gold, metals, steel, industrials. Certainly looks like a good sector. Look at drug, retail, railroads, computers, and also internet. Just some sectors that I think are moving very nicely that you might want to look at some of the stocks within those sectors. Moving on to the education portion of our video, we're using the book Trading in the Zone by Mark Douglas, Trading in the Moment. And in this section, he talks about two things that unsuccessful traders do to blow out their accounts and to lose all their money and stop trading. First and foremost, they obsess over market analysis. Now, I would even go on to say that some people don't even know anything about technical. I mean, I made trades without knowing anything about technical analysis. And then you have the people who know too much, and they put too much weight into it. And technical analysis is great. I'm a firm believer in it, but you still have to believe in the uniqueness of each trade. The patterns are forming again, but it doesn't mean the same thing is going to happen this time. And in addition, the second thing traders do that cause them to lose money, is they don't even examine the risk before getting in a trade. If I get in a trade, where's it going to go to? And more importantly, if it goes against me, how far is it likely to go without me? Support and resistance. And so these two things of putting too much weight in the moving average crossover and then not identifying the risk are what caused most traders to lose their money. Our partners, we got a great futures trading room, 10-day trial access for $29. Man, we did great yesterday. Alex rocks. And then if you're going to trade futures, we got a great futures brokers. Again, intraday E-mini margins as low as $300. You're just not going to find that. And if you sign up through us, you get 20 free trades. And then we have a futures day trading plan to help you get up and running with and trading futures. Subscribe to our podcast. Come join me tomorrow night. And 5 good minutes will help you get started in trading futures. Thanks, guys, and I'll see you next time.